Is that also considered the Mineola one? No, it's not.
No, it's Williston. It's Williston Park.
Richard Rice Bantini is the owner, right?
Yeah, yeah, yeah.
I've
So
known Rich for a long time. I've had Rich on my podcast.
oh really?
Actually, yeah, yeah, we go back a long time. He's a good dude.
I would love to see that. You still have it?
Yeah, yeah, it's on our YouTube channel. If you
I would
just
love to see that podcast. So
yeah,
let's
man.
dive right in, boss. So you're a mortgage broker.
I am indeed.
All right. So explain for the people at home, what is that? What is a mortgage broker?
A mortgage broker is essentially a entity that can shop your loan to multiple mortgage lenders. That's basically what it is. So instead of going to one specific bank, we can go to over 100, whoever we have on or whatever that mortgage broker or whoever rather that mortgage broker has on board with them. We don't connect them with them, so we don't like take the file and hand it off
Hmm.
to that company. So let's say Chris, you're taking a loan with Ben Lavender at Madison Mortgage, and I place your loan with United Wholesale Mortgage. All United Wholesale Mortgage is going to do is underwrite the file. Okay. All the processing and everything else is handled here with us at Madison Mortgage. So the client isn't like dealing with another company or anything like that.
Right. So how long have you been in this job now?
12 years.
Oh
I think.
wow. All
Yeah,
right.
yeah. Time flies, man. It's crazy. Very, very interesting business.
You started off as a loan officer.
I was not a loan officer at first. I think it took me maybe a little under a year to get my license, but I had the luxury of coming into the business being on a salary, a very, very small salary. And I'll dive into why that's important because the average loan officer comes into the business, they're recruited by some guy or gal, and they're like, hey, go, stalk realtors and financial planners and go get some business. Okay. And
Yeah.
then the problem is like they get the business and then they yes, 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 everything because they're just trying to get deals.
Yep.
And then they're scrambling to figure it out and then they lose that relationship. So I was very lucky that my manager and mentor, basically, I worked under him, and all I did was structure transactions and talk to clients and talk to realtors, right? But I would review them with him to make sure that I was doing it correctly. So that's a luxury that not many people get in the business, and it's a really great way to learn because even though, yeah, there's a large part of this that is sales, right? It's sales involved, but the truth is, in order to be successful in this business, you have to know what you're doing.
Of course. So your job is 100% commission based.
Mine is, yeah. I haven't always been that way, but I'd say for well over half my career, I've been commission based. Yeah.
And it now I'm sure that you're making much more now than when you were salaried.
For sure, but it has its risks, right? When business is slow and you're in a slump, you're kind of like, oh, that salary looks a little bit, looks nice right now, looks enticing. But overall, I'm happy with the setup. We have a really good system here, so I have no, what's the word, regrets about not being on a salary.
So what is the name of the company?
Madison Mortgage,
Madison Mortgage. So 12 years ago, what inspired you to pursue this job?
nothing. Nothing. I met my cousin, who was essentially my mentor, not my first cousin, like my second cousin. I basically met him at a family event, and I was, let's see, about 4 or 5 months away from graduating Queens College. I studied business with a focus in accounting. And I was going to do accounting, and he was like, just come try mortgages, you may be good at it. And the truth is, man, I was not very good at it. I didn't know anything. I was not what's the word, as extroverted as I am now. That's something I had to develop. And, it took a lot of reinventing myself, listening to audiobooks and studying and learning about loans and talking to as many people as I can. It was an absolute grind, and I would say it took me maybe 4 to 6 months before I like got my bearings and I really like got it. And then after that, maybe another 3 to 4 years before I felt like I know about 95% of what I need to know to be successful in this business. So it takes a while, but some people, I would say I'm a slow learner.
Mhm.
Most people that are talented, they pick it up much faster than I did.
That's interesting. So, because I what my next question was asking you about your first year. So it sounds like your first year didn't go so well.
No, I remember once I was cold calling a lead. We had these leads from, some place that sells like refinance leads.
Hmm.
And the phone call was recorded, and my manager played it back to me, and I was mortified, absolutely mortified. It was terrible. But in my defense, no one really taught me anything. They just kind of like threw me into it and was like, take an application, but like I didn't know how to answer any questions because I didn't have the knowledge, right? And then I communicated that to my manager, and he was like, okay, so we're going to do it this way. I'm going to teach you how to structure deals. I'm going to show you how the application works. And that's when I finally started learning how to do it. And then from there, it was just an uphill trend, really.
So it sounds like you didn't really get the support that you needed in your first year.
No, that was only in the first few months. After I communicated that, I had plenty of support. It's because it's not just on them, it's on me to communicate that as well.
Right.
And when I did, because I tried it for a few months, and then I was just like, this isn't working. And then he agreed. He's like, yeah, this isn't the way. And that's when I started doing more learning and studying about the business, in addition to all the other stuff I mentioned before. So it was a rough year, but no, my support wasn't poor. I had excellent support.
Where's your accent from?
I'm from London originally, but I've been
Oh,
here for how long? About 21, 22 years. So I moved here when I was 14.
I
Uh,
knew it wasn't a Brooklyn accent.
Definitely not. I live in Brooklyn, but
Yeah.
it's not a Brooklyn accent. No, but it's a little bit mixed because when you move, from a foreign country in your teens, the chances of you hanging on to your accents are much lower. So I have a bunch of cousins and even my sister that moved here in their late teens and early 20s, and they all have very, very strong British accents, way stronger than me. I sincerely hope none of them enter the mortgage business because then I have to compete with them, which I don't want to do. So, yeah.
So, Ben, walk us through a normal day in your shoes. What time do you wake up? Coffee or tea? What kind of coffee or tea? Walk us through a normal day.
Okay, yeah, no, that's a great question. So it depends on the day, but when I'm dialed in, it's pretty simple. I typically wake up at about 5:45, 6 in the morning.
Wow.
I hang around in bed for at least half an hour, like minimum. It takes me half an hour to actually get up and like
Like your
hit the
thoughts.
alarms. I'm not immune to that problem at all. And then, get ready and go to the gym. Going to the gym sets the tone for the day. In my opinion, it varies for everyone, but if you're a gym person, you can't overdo it. You need to leave something in the tank for the rest of the day. So I'm not like going to CrossFit or some martial arts class and like going insane. I'm just like I lift for roughly, between my warm up and everything, takes me about 90 minutes.
Wow.
Yeah. So come back and shower because other things are, important to me. I need to do a good warm up. I have some back issues. I have my some arm issues. My left shoulder, I've had surgery on it twice.
Wow.
And then I dislocated it like 5 months ago or 4 months ago. That rehab process hasn't been fun. And then by the time I get to the office, it could be anywhere from 9:30 in the morning till I'd say 10:30, depending on the day,
Mhm.
and depending on meetings and stuff like that. So once I get in, pretty simple. Just, catch up on emails, which truth be told, I'm doing as the morning progresses anyway. But either way, come in, take a look at the entire pipeline, what's going on, what leads do we need to go after. We have an entire, so my team set up, by the way, I should mention this. I have around 10 people on my team. Six of which are commission loan officers that I manage and help them, and the remaining four are either loan officers that help me work on the business that are salaried, or it's my admin or telemarketer, whatever the case may be. So they're handling a lot of the day-to-day lead stuff, which I'm obviously guiding them through. But after I basically go through the pipeline getting into work, that's when we get into other stuff. So the standard stuff as a loan officer, you're locking rates, you're reviewing loans, you're reviewing pre-approvals, I'm signing off on them, I'm talking to my clients, I'm talking to realtors. But otherwise, I'm focused mainly on business development, right? So whether that's getting someone in on my podcast or teaching, I teach CE a couple times a month to realtors, right? So that also we have to work on amongst shooting content and a bunch of other random things which candidly just pop up out of nowhere. So you're juggling a lot of things as a loan officer, or at least I am, right? Because I not only do we have to focus on underwriting files and getting them closed, we have to focus on marketing and getting business in the door to begin with, which, if you ask me, is the job, right? And that's why I kind of keep my title as mortgage originator, right?
Mm.
My job is to originate mortgages, get mortgages. I'm not, even though I am technically, I'm a licensed professional, I'm a loan officer. I am these things technically speaking, but I like to keep the word originator in my name or in my title rather to remind me that is what I'm here to do.
Very interesting. So, you mentioned your podcasting, and I haven't done my homework. I need a chance to look at your podcast. I haven't seen it yet. Do you have a
That's
lot of
okay, man.
do you
It's
have
not.
a lot of episodes?
We do, but shooting is sporadic. Sometimes I'll shoot like two, three times in a week, and then sometimes I'll take like 2 months off, right, and not do anything. So I wouldn't say the podcast isn't anything amazing, right? But for me, it's more of a value add that I use for the realtors that we work with, is to get them some exposure, to get them some content going. And don't get me wrong, it has other functions. It's good for recruiting. It's good for getting people to come to the company, or rather, it gives them some insight onto how the business goes. So for instance, it's very common for me to interview someone and they tell me that they've actually watched a couple episodes of the podcast, and I'm always shocked. I'm like, you don't have anything better to do? You're not even in the business. Um, but obviously, I appreciate it, and it's a sign that they're taking the job seriously. So that's the main function. Oh, I didn't even finish how I end my day, or how the day basically drops off.
Hmm.
So I'm personally, I'd say I'm very scheduled. I like my routine. Typically, I do not leave the office until 7 p.m. It's
Okay.
just, it's always just something that's been that way. I'm going to be married in a year and have kids in maybe
Nice.
2, 3 more years. Yes, thank you.
Congrats.
So, thank you very much. So when that happens, I don't plan on staying in the office till 7, right?
Right.
I want to
Knock it
come
out
home,
now.
spend time with my family.
Mhm.
Um, and what I've also noticed is that as the business has changed, I also don't get as many phone calls from people at like 7 o'clock like I used to, right? What's really happening, and before I continue, I did used to, right? It used to be very common for me to speak to people at 7, 8, 9 o'clock, and then that kind of just disappeared. And most people call me throughout the day anyway.
Mhm.
Weekends are different. Weekends, we get a lot of phone calls and a lot of action, but that's different because you have to place offers on the weekend. You have to be available for your clients, otherwise they're going to miss out, right? If you send the pre-approval on Monday instead of Saturday or Sunday, someone else has already accepted the offer, so we can't
Yep.
wait for that.
Yep.
Um, but anyway, yeah, leave the office at 7, takes me half an hour to get home, eat dinner, chill for an hour or so, go to bed, rinse and repeat, man. It's pretty simple. Pretty simple.
And is this 5 days a week, 6 days a week?
No, that's 5 days. That's Monday through Friday. So the only difference is Fridays, I typically leave the office 5:30 because I have dinner with my family every Friday night. And then Saturdays, I rarely come into the office. I live in Williamsburg. There's no point of me driving to Long Island, and I have the same setup at home, right? 3 monitor screen, have everything that I need. So there's no point of me coming in. But the business, like I said, you always have to be available on the weekend. As a loan officer, you don't really have a choice,
Yep.
unless, you're okay with losing business and losing relationships, which most people aren't.
So if you have that set up at home, what inspires you to come into the office 5 days a week?
That's a good question. I'd say that I like being around my team, right? I like being in the presence of a bunch of other people. I feed off their energy. Don't get me wrong, there are some days where being constantly interrupted and people walking into your office can be irritating.
Uh,
But there are ways to offset that. Like right now, I have my office door locked. I have a do not disturb sign on it. So other than that, it's more enjoyable to come to the office, candidly.
so you said you have 10 people on your team, correct?
Yeah.
I'm assuming that you're still recruiting more.
So I don't recruit, meaning that I don't go after people because, well, two reasons. One, there are full-time recruiters that I have to compete with. I'm busy. I
Uh-huh.
have all this other stuff to do.
Uh-huh.
Meanwhile, you've got people like going crazy on LinkedIn. And I mean, I get three, four recruiting calls a week, right? It's pretty
Wow.
common.
Uh-huh.
But I just don't have time for it. So what typically happens is that people get my name recommended to them. I even have other loan officers from other companies that recommend people from their team to me, which I appreciate a lot. No,
Uh-huh.
because look, there's sometimes it's not a good fit, right? It's someone may have a particular style, or even the banker or the lender themselves, the culture, it doesn't really fit with that person, right? And they need, let's say, mentoring, they need guidance on social media and all that stuff. And they're like, Ben's a good fit for you. I can't do that, right? So I'm not saying they're like trying to just give me their employees. That's not what I'm saying. It's just a matter of they're looking out for the best interest of their person, and there you have it.
So it sounds like there's something that you're doing right that other brokers are doing wrong. What is that thing, or is it multiple things?
I'd say that the number one thing, because look, I have all the fancy gadgets, right, that we mentioned, the podcast, the
Uh,
short form videos, the
uh,
CE. Um, but honestly, none of it matters unless you can pre-approve a file properly. And that is the number one thing. I can't tell you how many referrals I get from other loan officers mess ups, right? I don't want to cuss on your podcast, but
it's
that's
okay.
really, yeah, that's really the main thing is that most LOs don't know how to pre-approve a file properly, or
Mhm,
they're just too lazy,
mhm,
which is common as well. So that's really that's 90% of it, right? Because I'll give you perspective, right? Let's say Ben Lavender is trying to court Christian San Pasquale as a realtor, right? I'm trying to get business from you.
mhm, mhm.
And, after 4 months, you finally send me a deal. Okay. I then incorrectly pre-approve the deal and the deal dies in contract. Okay. Not only are you never going to send me a deal again, but you're probably going to tell everyone else in your network as you're pissed off and you're like, I showed this buyer 50 houses. It took me everything to get them an accepted offer. And this freaking loan officer didn't take an extra 5 minutes to properly review the income.
Yep.
I'm never using this guy again. You should never use him again. Right. So that's the number one thing is loan officers spend all their time courting agents, which again is a large part of the business. I still do it to this day and I'll never stop because it's how we get business to keep coming. But
Uh,
if you can't get a deal closed, then nothing else really matters. So I've shot videos of me saying this actually, but you typically get two to three types of loan officers. You get one loan officer who is this marketing networking genius, right? That's
uh-huh,
really, really good at getting deals in. And
uh-huh,
then you get a second type, which is the underwriting guru, right? That knows every guideline on from the back of their hands, but, they're not particularly good at getting business in. The
uh-huh.
loan officers that are exceptional and in the top 1% are the ones that combine those two characteristics. Okay, because if you can network like a lunatic and all your files are tight, it is a recipe for success. That's the number one thing. Combine those two and boom, they'll have it.
It's interesting how small that percentage is. Why is the percentage so small?
Um, because the two characteristics are kind of opposite.
Interesting.
Yeah,
Interesting.
because being a highly analytical person, people that are highly analytical tend to not be tremendously social.
Is that true?
Not always, but I'd say more so than not, right? I'd say maybe 80% of the time. They
Uh,
tend to not be
uh,
the most social people. Um, and it goes with what I said in the beginning, right? That most loan officers that enter the business, they've got no salary, so they're on a commission, and they need to get deals as soon as possible. And that's when they, yes, 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 every realtor that they come across, the realtor send them the business, then they screw up the deals because they don't know how to close them, or they said that yes, they could do something that they cannot do. So that's the other thing as well. So for new loan officers, mentorship is absolutely key in terms of learning how to structure deals properly And then once you've basically figured out how to structure deals properly, or you at least have a resource for structuring them. So let's say that you're a new LO, you come in and maybe you don't know how to figure out a file, but your manager can help you do that. That's fine,
Hmm.
right? As long as the manager knows what you're doing as well. But look, a lot of the LOs in the business, even the managers, they do the same thing, right? It's a fairly, I wouldn't say it's a dirty business, but it's kind of sharky in a way, right? Where a lot of people are just desperate to close. And don't get me wrong, and I know that I'm kind of speaking in a negative way. I have a ton, a ton of loan officer friends who combine these things, both locally here in New York and nationwide, that, have integrity. And the way that I see it is that for those loan officers, including myself, it's good for us, right? It's less competition. If I have to keep competing with people that are like me, it's going to be exhausting, right? That's very, very hard to do, is competing with like-minded people. So it sucks for consumers, but it's nice for us.
So it sounds like you view other loan officers as competition.
Absolutely. Yeah, all loan officers are other competition. Now, with that said, there's plenty of business to go around,
Uh-huh.
right? So you'll never hear me bad mouthing another loan officer, even if they deserve it. A ton of them do. A ton of them deserve to be called out. But
Uh-huh.
I kind of go with, it's inverted, so you can't really see. But what this says is losers focus on winners and winners focus on losers. Very
Yep.
popular meme when Michael Phelps was crushing the Olympics. There's that picture of him swimming with the other guy looking at him when he's in front. And that's really my focus, right? The only time where I'll look at other competition is if they're doing something that I think is really good and I'm admiring them and I'm like, how can I do that? Right? So I'll look at competition with admiration, not with with jealousy or envy. I don't think that's a healthy way to live in the business or a healthy way to live life even.
Yeah, well, I also noticed in my own life that people who are superior to me tend to be more inspiring. Like for example, the top producing agents that make, 20, 30 sales a year tend to inspire me more than make me jealous. And I think that is one key to success, being inspired by people who are above you as opposed to being jealous or feeling animosity towards them. I also noticed that in the way that you talked, it sounds like a lot of learning is on the field and that studying for the test, because obviously I've never been a loan officer before,
Yeah.
but it sounds like studying for the test only teaches you a small fraction of what you need to know, and then once you enter the actual field, that's when the learning really begins. Is that accurate?
It's extremely accurate. Yeah, the test doesn't prepare you for anything business related. I mean, to be fair, it's the same for the real estate test, right? It
Yes.
doesn't
Yeah.
doesn't teach you how to like get leads and network. I mean, look, honestly, the test doesn't even teach you how to structure loans properly. There are some questions about loan to value ratio and debt to income ratio and stuff like that, but it's mostly like laws and, ethics, which I think is a good thing, honestly, because ethics is something that our business is lacking on both sides. The amount of people that I know that are doing illegal things and
Wow.
kickbacks and
Wow.
committing fraud is tremendous, right? And I'm not saying it's always intentional, but oftentimes that it is. So, um, you need to learn in the field, but also you do learn through mistakes. I'll put it
Yeah.
that way, right? But with that said, a lot of them can be avoided with the right manager, right? Or mentor, right? If you have the right manager that's reviewing files with you and is giving you guidance and you're listening to them, then you can do very, very well. And the other thing is that you also have to be coachable and not have an ego. This is difficult to do, and it's definitely difficult to do as you grow in the business. But I have people on my team that have been doing this for just a year, and they're crushing it. They're closing 1 to 3 deals a month, which for a new loan officer is impeccable. Right? It's absolutely amazing. The average loan officer right now that's even been in the business for a while isn't even closing a deal a month. The average loan officer is struggling tremendously. I'm curious to see how many loan officers renew their licenses. Right now is renewal time. I'm expecting a very, very large drop off, and that's honestly just kind of Darwinism, survival of the fittest type thing, and sometimes it's tough. Maybe they'll be back. I don't know. But going back to what I was saying before, it's all about again those things that I mentioned, being coachable, listening, and I have basically people on my team or people that have been on my team, I should say as well, that I give the exact same coaching to that I do to other people. And the difference between the two is implementation and willingness to try new things and be uncomfortable. Okay, the ones that basically challenge themselves and put themselves out of their comfort zones are the ones that will get and do get a lot of business and succeed sooner rather than later, right? Because for me, I didn't really become a strong producer until I would say 2018, 2019, so that's, half of my career. The first half of my career, I was a good producer, but I wasn't anything special,
Mhm.
right? I don't know if I mentioned this, Christian, or you know this, but last year I was ranked 64th in the entire country for mortgage broker production.
Wow.
There are over 19,000 in mortgage brokers in the country.
Wow.
That comes from being relentless and trying and trying and look, honestly, it wasn't even a good year, right? Like I when I was told that that was my ranking, I was shocked. I was absolutely shocked because like this year's been terrible, but I was like, it's been terrible for everyone else too, apparently. So
Yeah.
they
So it sounds like a very, very competitive job. And I want to go back to the ego thing because I love talking about ego. I feel like in any job, you're going to deal with a bunch of egos and everyone has one. And, I think that one very, very, very large key to success is the ability, not necessarily not having an ego, but the ability to swallow it and the ability to control it. And, whenever I deal with other realtors or even clients who have a big ego or loan officers, I always think in my head like that has to affect the business, and this person has to do a better job controlling their ego because there's no way that won't affect your business. Ben, have you ever had to fire a loan officer?
yeah, a couple times. Yeah. But in terms of ego, I even have to check my own ego. And sometimes I don't check it and it backfires and I learn the hard way, right? Because, like you said, you come across other LOs, other realtors, attorneys, clients that are difficult to work with. And the most common thing that I do that essentially takes me out of that is I take a deep breath because I get really pissed off, like I'm fucking like ready to go and like choke slam someone. And I take a big deep breath and I'm like, okay, let's bring it back. We're a team, right? We're all on the same team. And I'll say this to whoever I'm speaking to. We're trying to accomplish the same goal, saying the same thing over and over again, or blaming this person, or blaming that person, or blaming me. Um, may not work. I don't believe, by the way, in which a lot of people say is to take responsibility for other people's failures, right? So, for instance, if I did a great job and I have the file essentially clear to close within 3 weeks, my average is 17.9 days. But if I do it within 3 weeks, let's say, but the attorney didn't order title yet for God knows what reason, I'm not going to take accountability for that because my staff and I were reaching out to the attorney in the beginning of the transaction asking for title. And then if the client is upset or the realtor's upset that we're not ready to close because the attorney didn't order title, I'm not going to take the blame for that, right? I don't believe in taking accountability for other people's mistakes, but at the same time, I don't believe in blaming the attorney, right? Even if I'm asking them, I'm not going to say to the client or the realtor, go fight with the attorney. All I'm going to do is say, okay, the last thing that we need is the commitment from the attorney. Maybe put some pressure on them. That would be really helpful. And this way we can get you closed. So it's because how you speak about other people also reflects on you tremendously. If you're the type of person that has to put other people down to lift yourself up in a transaction, then that's just again, it's a shitty way to live. That sucks. Only miserable or insecure people do that. right? And that's not the type of person I want to be. And again, like I said, Christian, I have my own ego that I have to check, and I do make mistakes
Yeah.
here and there.
Yep.
And like I said, we're trying to get better every day.
Yeah, and not to get too psychological, but it is important to put blame on yourself and other people, and sometimes it can be shared. But that's a whole psychological discussion. Ben, what is your favorite thing about being a mortgage broker?
Oh, that's a good one. It changes from time to time, but I'd say the main thing. Okay, I'll give you my answer 5 years ago. The answer 5 years ago was the day to day. Like I get, the high of speaking to clients and solving their problems and giving them that gratitude. The reality is now because I have a team, my team speaks to my clients the majority of the time. I
Yep.
typically talk to the clients myself at three stages: the beginning, when we get the referral in, the middle of their transaction, and then post closing or right before closing. So I'm not the main contact, so I don't get that high and that joy anymore. So I have to derive that from somewhere else, and that to me has come from strategy, right? The strategy of growing the business and learning new skills. How can I better serve my realtors? Not only give them value, but give them a less stressful experience, right? So a lot of realtors tell me that they're helping their loan officer chase the clients for conditions, right, to get submitted to underwriting. That's ridiculous. Like no realtor should have to do the loan officer's job, otherwise pay them, hire them, give them a freaking salary to do it. But small things like that, and how do I make the process less stressful for the clients? How can I anticipate the things that they're worried about? So, or things that may alarm them, right? So, a small thing, Christian, is that like the average client doesn't know that they have to put 10, 20, 50,000 down on contract, right? When they first get the contract. No one tells them that. So we're like, hey, obviously you should speak to your realtor and your attorney about this, but be prepared to put money down on contract. It's very common. And even just paying for an appraisal, paying for their home insurance, paying for their home inspection if they decide to do one. We want to try and anticipate them because even though we tell them, you'll need X amount for closing costs, they automatically think they bring that money at the end because it's called closing costs. They
Yep.
don't realize that some of that takes part before. So
Yep.
we want to make them aware of that. We want to make them aware of the timeline. So it's really just the small things that improve the experience. And I'm always trying to find those little like nuggets where it improves their experience, which isn't easy to do, but it makes it more of a fine, what's the word, fine-tuned oiled machine. That's what I'm trying to say. And it makes us reliable. I don't want to have, 1 out of 5 transactions be amazing and then 4 be just okay average. I want every single one to be phenomenal. And is that the case every time? No, absolutely not. But the majority of the time it is, and we're going to keep trying to refine it and make it better for everyone. So that is essentially my favorite thing, is figuring out how to constantly improve the process and then implementing those strategies. That is what I derive my joy from this business.
Very interesting. It's like the more loan officers and brokers I speak to, the more I'm starting to realize it's really like a puzzle. Every single time it's a different puzzle, and it's kind of like a chess game. Every game is different, and you gotta figure out what they want and what they need, and like it sounds like a very complex. Because obviously I've never been on the other side, but it sounds like a very complex process.
It
What
is.
is your least favorite thing about being a mortgage broker?
Ooh, I'd say it would be the people working with people who are ungrateful or disrespectful.
Good answer.
That includes realtors, by the way, and it
Yep.
includes attorneys.
Yep.
Um, I got rid of a lot of realtors that I used to work with over the past few years because I couldn't take the disrespect anymore. It's like it doesn't not everything has to be demanding. It doesn't hurt to be polite
Yes.
or to say thank you or this or that or very simple things, right? So I'm not even talking about, people that are like aggressive. I just mean like basic communication, right? Just saying, hey Ben, Hope you're having a good day. If you can, send me the pre-approval from so and so again. I need an updated one, or I lost it when you sent it to me last time, as opposed to someone just being like, Ben, send me the pre-approval. Like, it's just basic manners and etiquette. For me, goes a long way, and I try and do the same thing. If I'm calling someone, I'm always just polite and keeping it pleasant, because this business is, or can be, very stressful for
Yeah.
everyone involved, especially the clients. If we think it's stressful for us, it's easy for us, right? We've done this a billion times, or
Hmm.
if you're newer, you've done it a few times, but still, you have more experience than the client,
Hmm.
right? So it's on us to keep things positive, calm, and collected. Obviously, we should handle problems in a timely manner when they come. And I always tell my clients, I can be the most perfect loan officer in the world, but real estate, especially New York real estate, tends to be the epitome of Murphy's Law. Something can and usually does go wrong. I'd say most of the time, it's something very, very small, and sometimes it's very big, right? So, but rarely. So it's all about how do you handle these situations? And this is a piece of advice I give to a lot of loan officers that work with on my team, in addition to realtors as well, is that when a client is freaking out about something simple, let's go with the common, the deck in the backyard doesn't have a CO, which is very common, very, very common in Long Island. Um, don't freak out, right? If the client's freaking out, you don't mirror them and freak out with them. Okay. You want to keep them calm and tell them their options, right? And then if you don't know what truth be told is that they should speak to their attorney, but they should mention what the options are if they know what they are, and advise them, speak to your attorney about your options, and we'll figure it out. It's not the end of the world, right? So that's really, to me, what it's about. I like working with people who don't make a mountain out of a little hill. Okay. Most problems in our business are very easy to solve.
Yep.
Um, I'd literally say 99.9% of the time, they are very, very easy to solve. And all it takes is some communication and working in a timely manner. But that is by far, Christian, my biggest pet peeve in the business is rude and disrespectful people on every single side.
Yeah, which kind of go back to the ego thing. So you said 99.9% are very easy to solve. What is an example of that 0.1% that's very hard to solve?
That's a good one. Okay, so the number one thing, and this is a good thing for loan officers to know, and I've made a video about this as well. The number one thing that is difficult to solve, it's not assets or a client's credit, because these things are often solvable. Assets, people can get gifts, or we can do something with the rate and we can change a few things and get them some more cash if they need to.
Hmm.
And credit, even if credit goes down, it can typically be increased a certain amount of points in, let's say, 20 to 30 days.
Hmm.
So credit is often fixable as well. The one thing that you can't fix is income, right? And that is where most loan officers screw up in two ways. One, the computation of income is different depending on the loan program. It's different for FHA, VA, conventional. There are similarities, but the difference is can what make or break a deal. Okay. And it's not just income, it's also the employment history. Okay. So I'll give you an example. Something like bonus income or overtime income, you typically need a 2-year history of that income. So let's say a loan officer, newer to the business, is like, my client's got a base salary of 70,000, but they get 50K in income.
Right.
I'm going to give them $120,000 in income. Meanwhile, they didn't look at the employment history. They didn't get what's called the verification of employment. A verification of employment, Christian, is a document filled out by a client's employer stating a history of their income for the past 2 to 3 years,
Mm.
right? So it shows us a breakdown of the overtime, the bonus, everything else. And this way we can compute the income properly. So you can't fix that, right? If you're in the middle of a file and you can only give the client $70,000 in base salary, and let's say you wanted to give them 50K in overtime income, but you can only give them 25, and your debt to income ratio is pinned, you're screwed. There's no way out of that other than a cosigner, which not a lot of people are willing to do these days. So that is from a loan officer's perspective, that is the number one screw up that I see.
Yeah, the point he's trying to make is you got to make money. You got to make money to get that house. You got to make that money. Even if you have the cash, you got to have that income. How are we on time, Ben?
I'm good. I could keep going for another 15 if you want.
All right, so we'll go until 12, I guess. Do you deal with commercial real estate as well?
I do, but it's not my forte. I've done a handful of them, maybe 10 transactions over the past few years. My bread and butter is, residential FHA, VA conventional loans.
I was actually speaking to someone about VA loans the other day. Um, they have to put the veterans put 0% down, correct?
0% down on contract or overall.
Well, that's what I was wondering because I heard from someone that they have to put money down and then they get it back at closing. Is that how it
That,
works?
that person is correct. You can either get it back at closing or you can put it towards closing costs because the VA, right, that gives them the VA loan can't dictate to an attorney or a seller that they have to do zero down, right? I also think that would be stupid, right? Because then a bunch of veterans can just go out there and sign a bunch of contracts. They could sign 50 contracts, right? And just be like, oh, I'll go with this one, and there's no repercussion. So the EMD is to protect the seller and also for the buyer to show that they're serious. So all veterans need to be made aware of that. Are there circumstances where I've seen a minimal down payment from a veteran of like $1,000? I have, right? I have seen that. I haven't seen it for a while, but I've seen it. So yeah, they can either again apply that money towards their closing costs or they can get it back. Now, in some circumstances, a veteran will do zero down and they'll also get a seller's concession to cover all their closing costs. In
Hmm.
that case, they would just literally get the money back and be done.
Interesting. And it was actually Rich who told me about that because I wasn't sure how that worked. And it's funny how like a lot of people know the first half but don't know the second half. It's that's interesting to me.
It's
Ben,
very
tell.
common. Most people don't know anything about VA loans, especially in Long Island or in New York. We don't get a ton of them, but I released a video on this yesterday for Veterans Day. The VA loan is the best loan in the country. It is amazing. No mortgage insurance, no down payments. There's a VA funding fee. Some veterans are accept if they're technically, disabled. Um, so it's the best loan ever. Unfortunately, it's not accepted by a lot of listing agents because they think that VA loans are hard to close or slow to close, which is not true. VA loans actually have the highest closing percentage compared to FHA and conventional loans.
Interesting.
VA loans only get declined 7% of the time when they go through underwriting. FHA and conventional are about 14% each.
So it's a misconception.
Yeah, if you're a listing agent, you basically have a higher possibility of the VA loan closing than any other one.
Interesting. I wonder why there's that misconception. And I would love to get my money back at closing. That's an incredible feature. So
Yes.
if you're a veteran, definitely look into it. Uh, Tell us about one unforgettable experience you've had in your career.
Hmm.
I'm sure you've had a bunch.
Like you mean like transaction type?
Yeah, or something maybe that stands out, maybe even something that was an emotional experience, maybe. I'm sure you've had a few of those.
Emotions. I'm half British, so we're fairly stoic and
Oh,
emotional.
is that a I didn't know that was a thing. British
Yeah,
stoic?
yeah. We have difficulty with that. It's therapy helps though. Let it out, let it out.
Right.
In terms of emotion. There are a lot. I think the biggest satisfaction or ones that I remember is when we are helping people in debt consolidate their debt and get some breathing room through, for instance, a cash out refinance. So I can't tell you how many people who are like struggling, and I actually think cash out refinances are going to grow, or they actually, to be fair, have already grown because credit card debt across the country is at an all-time high. It's
Yep.
absolutely massive.
Yep.
So let's say if someone is basically struggling to pay their bills and we manage to consolidate their debt, get them a lower payment, put it into a lower term, and I can free up their monthly cash flow by $1,500 a month. That to me is one of the most satisfying feeling feelings that I can get because we see how happy our clients are when that happens, right? And they can finally like they can breathe. And it's like they've got this new joy on life and they can finally just enjoy and not go crazy and re-spend everything, right? You pay all your credit card debt off, don't go and spend it again, but they learn and they can relax and they can breathe easy. So that to me is one of the most joyful experiences. And that's happened, God knows how many times, hundreds of times, but it's a nice one for sure.
Yeah, I mean, what I like about our jobs is we're literally helping people with probably the most important decisions they ever make in their life. Maybe next to getting married, it's debatable, but especially first-time home buyers, like this is the biggest decision they'll ever make. So it's really nice to help with that process, and it can be an emotional experience. I didn't know that. I didn't know about that stereotype, that British stereotype. So we'll talk about that another time, though, I guess. Ben, approximately how much per month do you spend into your business?
That varies tremendously. I'd say right now, probably around 5 grand. Just
Wow.
yeah, just on like marketing and stuff.
Also, your office.
No, I'm not talking about that. I don't own the office. So,
Okay.
yeah, no, I'm just talking about like basic marketing things, events, and I have, a bunch of like British mortgage broker merchandise and, a bunch of other things, right? But in terms of like my salaries and stuff that I pay to my staff, those are much more expensive, right? That's probably another
Right.
20 right there.
Right.
Um, but yeah, so you could say 40, right? 40, but sometimes the marketing stuff goes up to $20,000 a month.
Wow.
Yeah, that's
Oh,
on the
just
high
the
side.
marketing.
Yeah, that's again, that's definitely the high side. So
Still, still.
yeah, on average, yeah, around 5, 6 thousand a month probably right now. I think as business picks up, and it's for me, it's already been picking up the past couple of months. But as we get to a normal level of volume, I expect that to be on average around 10 to 15 thousand a month. Twenty
Wow.
thousand was during COVID, where you would wake up and get 5 deals out of nowhere, right? Like it was just that was just the market, but
Yeah.
right now not so much. Yeah.
Man, I didn't know it was that high. So but even loan officers too, they have to put money into their business too, like regular loan officers.
It depends, if some companies, like some managers, will pay some of the expenses for them, or they'll put it on like a little profit and loss and they'll take it out of their commission. But I would say, and I think you like this, Christian, I got this advice from Rich. And this was about 11 years ago.
Hmm.
And Rich said to me that you have to treat this like a business. It is a business. This is not a job. You have to live and breathe it, and you cannot be afraid to invest money into your business, right? And I was very lucky that I got that advice from Rich early in my career. I was in my mid to early 20s, right? Most people don't really understand that concept until they're 5 to 10 years into their career
Yep.
because they're trying to
Yep.
keep expenses low,
Yep.
which you
Yep.
should. I'm not saying you should spend for no reason, but this is a business. It should not be
Mm.
stupid expenses that
Yep.
make no sense whatsoever and are just fun. They should have an ROI for sure, but you shouldn't be afraid to invest in your business. It also depends on the type of lifestyle that you want. So I like to travel. I like to spend time and go visit my family. I have family in like 6 different countries. I like to go see them once a year, twice a year if I can. So I don't want to be one of these loan officers that, I'm available 24/7. Like to me, if someone says that, it's the number one sign that they're not particularly strong in not mortgages. They can be very good at mortgages, but they're not good in work-life balance. And if you want to have a life and a family and you want to enjoy life, then you need to balance that. So a lot of the investing goes into automated systems that not only allow me to do that, but it streamlines the process for my clients. And that could be something as simple as investing in software that allows clients to do an automatic loan application and upload documentation for pre-approval. Something like Flowify, which a lot of loan officers have, but a lot of loan officers don't, can speed things up. And truth be told, the average client that we speak to these days The younger generation, early 20s, even mid 20s and late 20s, they're not phone people. They grew up on texting and they want to do an online application. They want to do everything. They don't want to have to be on the phone with someone for 10 to 30 minutes doing an online application.
Mhm.
The only exception, by the way, are immigrants, right? So we do a lot of loans with immigrants because we live in New York, where we have the most amount of immigrants anywhere. I'm an
Yeah.
immigrant too. And immigrants tend to want to do business face to face. And for those people, I mean, we meet clients face to face all the time. But the point is, I guess, is kind of like meet them where they're at. Path of least resistance. If I get a client that wants to meet face to face, I'm not going to say do the online mortgage application. He or she feels most comfortable face to face. So I kind of went on a tangent there, but I think you get it.
It's all good. I guess people come into the office a lot, it sounds like.
You get both. You get
Yeah.
both. If it's local, especially clients from Queens, they tend to want to meet face to face, and we're right on the border of Queens and Nassau and the Bronx, actually. So yeah, we got quite a lot of face to face.
It's nice to have those options though for the people, because back in the day we only had one option. So it's nice to have the option of doing it online or face to face. Ben, what is your long-term plan?
Came out of nowhere, man. You can give me a warning. My long-term plan. It's hard to say, right? It's like there's the competitive side of me wants to close 50 to 100 loans a month and be the number one mortgage broker in the country. But at the same time, I'm not willing to work like an absolute lunatic in order to do that. If and look, even as I say that, there's a part of me that's disgusted with myself for saying it, right? Like my competitive side is like, you can't think that way.
Yep.
But
Yep.
at the same time, like life is short. You never know what happens, and you need to spend time with people that are important to you, and work with good people. Like all the realtors that I work with, I love working with them. They're great people, and it's all about to me finding great people to work with that you enjoy working with, because then it doesn't really feel like work,
Yes. Yep.
right? It's more like, okay, like you don't have to be best friends, but
Yep.
being on good terms and having good chemistry makes everything more enjoyable. So long-term plan is to absolutely dominate and destroy everyone. I shouldn't say that. It's to absolutely dominate, and how I do that though is not just a matter of getting more loans. I want to keep mentoring people.
Mhm.
A lot of people have been asking me to get into coaching over the past few years. It's not something that I'm really ready for. I do on the side, I do free mentoring for loan officers through a mortgage association, which I've been doing for like 3 years. And that's helped me get used to coaching. So maybe I'll do coaching, maybe I'll do public speaking, or I don't know, but I've got at least another couple decades in the mortgage business for sure.
Yeah, well, it sounds like you're at least at the point where, because and the beginning is always the hardest, so at
Oh yeah.
least you're way past that point of like trying to get established. Now you already have a team, now you're known, now people know you, people like and trust you. So at least you're past that like first hurdle, and now I guess you can relax a little bit because I feel like in the first 1 or 2 years, you you just got to be that gun ho agent or loan officer.
It's not just that, Christian. It's also like after a while, the grind when you have your relationships established, and with that said, relationships expire. So you always have to recruit and
Interesting.
get new relationships. That never
Yeah,
stops.
interesting.
Um, but oh, I lost my train of thought. What were we saying before?
I was saying that in the first year you have to be gun ho, and then
Right. Okay. So yeah, I got it. So after a while, like after 10 years, the energy that you put into grinding and being gung ho, it does not allow you to make systems for your business, right? Because when it's this constant aggressive push, 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 it's you get burnt out. I see it through other loan officers that I'm very close to. They go crazy 7, 8 months marketing, networking, and then they disappear for like 4 months, right? That's not good to the people that you do business with, right? Because they're going to be like, what happened to you? So in the first, I'd say 2 to 5 years in the mortgage business, you have to work like a dog. You absolutely have to. You have to live and breathe mortgages. It should occupy and I hate saying this, but it should occupy like 90% of your thoughts. And
Yeah.
that's the way I was for, I'd say, 6, 7 years of my career. It's all I thought about. How could I get better? Which, to be fair, Christian, isn't healthy, right? So I've also spent time figuring out, okay, like this is when I focus and I think about work and I focus my thoughts on work. This is when I think about my fiance. This is when I think about my friends. This is when I think about my family. Okay, we have to, you have to have balance in life because I truly, and you said, let's not get too philosophical, but it all comes full circle, right? If you're a happier person, a more complete person, um, you will do better in the business. And also, I've got a bunch of friends actually that are in their 20s, in both the mortgage and their realtors as well. And I've explained to them that, being again the gung-ho guy or gal that goes after it 24/7,
Mhm.
it's acceptable in your 20s.
Right, right, right.
But when you get to your 30s, you need something else to talk about other than mortgages. It's not cute when you're 35 years old and you can't have a conversation without only talking about your business. You have to develop more as a human. You have to get more hobbies. And to be fair, I also see a lot of people in the business that in their 20s that have a good grip on that. But with that said, there are a lot of them that don't, and they need to figure that out.
Yeah, I mean, there's no point in making a lot of money if you're not happy and if you don't have inner peace. And we could talk about that for a long time. Do you have any tips for new MLOs, Ben?
Oh, I got a ton. Yeah. Learn how to structure files, right? And the way you do that is by asking underwriters a lot of questions, asking your manager a lot of questions. Don't be afraid to call an underwriter and be like, hey, how did you come to this conclusion? Can you explain the guideline to me? Can you explain the computation to me? Don't be afraid to learn from them because basically a lot of the best loan officers I know understand underwriting guidelines more than most underwriters, right? So that's kind of where you have to be. And then once you kind of get that under control, then you can go aggressively into studying marketing and networking and all this stuff, right? And because that stuff is key too, but as I said maybe half an hour ago, there's no point learning how to market and bring in business if you can't close any of it and your reputation gets destroyed.
Yep.
So those are the main two pieces. Focus on it in that order, and I guarantee it's a recipe for success. And the other thing is that you have to have extreme grit. People will take advantage of you in the beginning of your career,
Yep.
um, and you'll be willing to because you're hungry for the business, which is admirable. But don't let people push you over, have a spine, and pick the right people to work with.
Yep, and it's funny because I would actually probably give those three tips to realtors as well. It still applies. Ben, where can people find you?
I'd say the easiest place is Instagram, which is B as in boy, followed by Lavmtg, Blavmtg.
Uh,
That's where I'm typically most responsive in addition to text and email, but typically, people are asking me questions all day on Instagram, honestly. So yeah, that's typically where I'm at.
I'll put your info below. Ben, it was great to talk to you, man.
Thank you for having me on, Christian. Really appreciate it, man. Next up is we're going to have you on our podcast.
I would love to do that.
Awesome.
Have a good one, boss. Take care.
Take care. Thanks,
Bye.
man.